Good afternoon, everyone. I'm Stephen Herwire. I'm the owner of Herwire Financial. Plans with Direction. Today is October 11th, 2024. Today, we're going to talk after the weekly roundup about financial plans, how they might save you money, and I list 3 real-life examples where they did or would have. It's not what you make, it's what you keep. And thank you, Bernard Baruch, for the best way to make money is to avoid losing it. Reason you have a financial plan is there is a myriad of landmines and train wrecks in your path of your financial life. There's a cost for doing a financial plan, but there's also cost to not having one. The 3 real life examples I'm going to show you are in the 3 categories of beneficiary reviews, qualified charitable distributions, and tax planning to avoid Medicare surcharges. Beneficiary reviews. All right, many things have beneficiary designations, things like life insurance, retirement accounts, 401ks, IRAs, Roth IRAs, etc., annuities. Now, I'll warn you, if any of these disagree with your will, the will's going to lose. So, the example I once had a client come to me and explain that their ex had passed away. Even though the ex had remarried, started a new family, and changed their will, they had not changed the beneficiaries on their 401k. This client was the beneficiary of their ex-spouse's 401k. This client asked how to get the money back to the ex's family. I indicated that even though I wasn't an attorney, it was my understanding that in a case like this, the client was free to take the money from the old 401k. Fortunately for the ex's family, the client didn't feel right about this, so I ended up referring them to an attorney who could help with this sort of thing. So, had this person who died had a financial plan, with me, and probably other financial advisors, we would do a periodic beneficiary review to ensure as life insurance or life circumstances change that your wishes for things that pass outside of the will, like life insurance, retirement plans, etc., go where you want them to on your death. Had this client not been so honorable, the decedent's family would have missed out. I was never informed of the actual amount, but this mistake could have cost the family many thousands of dollars. Qualified charitable distributions. Now, this will apply once you become 70 and a half or older. If you are charitably minded, it may be very useful. And if you have tax deferred accounts like 401ks, IRAs, etc. So I had a 73-year-old client who had not yet taken their required minimum distribution, RMD. Basically, if you have an IRA or 401k that your Uncle Sam has never gotten their cut, at a certain age, they expect you to start taking money so they can start getting their cut. Their plan before getting a plan with me was to take their $9,200 RMD and just put it in their checking account and then write a check to the church. I mentioned to them that if we did a qualified charitable distribution, they might be able to realize significant tax savings. Because you see, this person did not have the ability to itemize because the standard deduction was higher than what he was able to itemize. So we consulted with their tax preparer, who agreed that it was a good idea. Since they were in the 22% federal tax bracket and 6%, they saved about $2,500 in state and federal income taxes, give or take. Also, this is a point that's really important. It did not affect their adjusted gross income, which means the taxation of their Social Security didn't change and no Medicare surcharges would be affected. Okay, which is a great segue into the third thing. Here's an interesting thing. People are worried about getting into the next tax bracket, which, can be a big deal, but if you're only a little bit into the next tax bracket, it may not be as calamitous as you think. However, if you go over certain thresholds by as much as $1 for Medicare purposes, you can find yourself paying Part D and Part B surcharges. Okay, and these can last 1 or 2 years. So I had another client who was in their last year of working full time, and they were going to work for about a month into the next year, and they had a uh, an income that was going to come in, that they had the discretion about when to take it, whether it was December of the final year they were working full time, or they could take it in January. So, since their final full year of work was going to have a similar income to the previous year, we were able to ascertain that taking the income in the final full year was going to push them over a bracket for Medicare surcharges. I immediately advised, in concert with their tax preparer, to consider pushing the one-time payment off into January of the year they were going to only work a month or so. The tax preparer concurred and has estimated the potential savings from not having to pay the additional Medicare surcharges would have amounted to about $1,500 a year in savings for 1 or 2 years. So, just to summarize, beneficiary reviews. One of the most critical parts, especially if you have changing life circumstances. I don't know how much we would have saved then had they had them, but potentially many thousands of dollars. Number 2, qualified charitable distribution. In this case, $2,500. Who knows? Only a thorough tax planning analysis, which is not tax advice, because we always work with the tax advisor, the tax preparer, and avoiding Medicare surcharges, $1,500 to $3,000 in savings. Unlike some of the other decisions people make, which require ongoing work and discipline, the work part of the financial plan for the client is at the front end. After that, your planner does most of the work with periodic reviews with you. I've only given you a few examples of costly mistakes that were discussed, but there's a plethora of other potential train wrecks that could be in your path. Similar to a pilot doing a pre-flight checklist, I use checklists to help me spot opportunities and potential problems for my clients during their financial voyage. Matter of fact, in my own personal experience, I was a reactor operator on the USS Sturgeon, and we used a checklist to verify proper operation of various reactor safety systems. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, the most important question is, am I saving enough, and is it in the right place? When you get to the glide path for retirement, last 10 years prior to retirement, will the USS retirement be shipshape on the appointed day? When you get into retirement, how do you avoid running out of money before you run out of life? And finally, the legacy. Does what you worked hard for get to where you wanted it to after you're done with your retirement? It can be reached at herwirefinancial.com. I do in-person, Zoom, and phone appointments. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, you can click on the Schedule an Appointment button in the upper right-hand corner of my website. If you want to see more videos like this, go to that red button, the one that's 2 over from the Schedule Appointment button. Go to my YouTube channel. Please like and subscribe. If your friends want more information, they can follow me on Facebook, LinkedIn, or Twitter, or become a YouTube channel subscriber. My phone number, for those who prefer the good old-fashioned telephone, 518-631-2569. Do not text it. You will be sad. Use the texting number below. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance reference is historical. No guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. Unmanaged index returns do not reflect fees, expenses, or sales charge. Index performance is not indicative of the performance of any investment. Investing in the stock market includes numerous specific risks, including fluctuation of dividend, loss of principal, potential illiquidity of the investment in a falling market. Investing in mutual funds involves risks, including possible loss of principal. Fund value will fluctuate with market conditions, and it may not achieve its investment objective. The Dow Jones Industrial Average is comprised of 30 stocks that are major factors in their industries and widely held by individuals and institutional investors. Standard & Poor's 500 index is a capitalization weighted index of 500 stocks designed to measure performance of the broad domestic economy through changes in the aggregate market value of 500 stocks representing all major industries. NASDAQ Composite Index measures all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. The market value less sale price multiplied by total number of shares outstanding is calculated throughout the trading day and is related to the total value of the index. Herwire Financial and LPL Financial are not endorsed or affiliated with the U.S. Centers for Medicare and Medicaid Services or any government agency. Everybody, have a great day.